Hey friends, I'm Devon, and today I have Andy Rips here with us from Guild Mortgage, who is going to explain what in the world is going on with interest rates these days. Thanks for being here, Andy.
Thank you so much for having me. It's been a crazy rate market, that is for sure.
So if you turn on the news these days, it seems to always have something in it about interest rates. What is going on with rates that we need to understand?
Essentially, interest rates right now are a key component, in our economy and how to control inflation. And so as inflation continues to go up, the Federal Reserve is raising their federal funds borrowing rate, and they're raising that interest rate to make it so that it's less desirable to borrow money, which should slow down the economy and in turn slow down inflation.
So when I hear clients say we need to hurry in and lock a rate because rates are going up again, that may have already been taken into account.
Exactly. As we continue to get economic reports that show inflation is going up, the Federal Reserve is pressed to raise their interest rate. When they're raising the cost of borrowing, it does go to the 30-year fixed mortgage, but it doesn't do it immediately. The market reacts before they actually do that raise. And so when we're hearing that they're going to raise it by 0.25%, the market has already priced that 0.25% into the 30-year fixed mortgage. And frequently when they actually do the raise and the raise is actually put into place, 30-year fixed interest rates will frequently go down because the market has overreacted and hedged on the higher side that maybe they're going to do a larger increase than what they said. And so when they do the increase that is projected, then interest rates, 30-year mortgage interest rates generally come back a little bit.
When I hear that, it doesn't make a whole lot of sense to me.
Right.
So I can imagine the people that we're making these videos for will appreciate that information.
Definitely. It's
as well.
Amazingly confusing.
So we keep hearing that the Fed is going to keep having these little incremental increases in the rates. What does that mean for the average home loan borrower that wants a 30-year fixed mortgage this year?
The Fed is hopefully approaching their last 25 basis point increase in May. And we're hoping that this is the last increase and it stops inflation. And at some point the Fed can start, reducing interest rates. And so if you can lock in an interest rate now in a home price without a ton of competition, you can be rest assured that, interest rates are going to come down. You're going to be able to refinance into a lower rate down the road.
When I hear the word recession, and I know a lot of people hear that word the same way I do, we think of prices are going to come down.
The last 70 years, we've had 10 recessions. Interest rates go up, inflation stops, we go into a recession, interest rates, then start to come back down. Whether or not we're in a recession right now is up for debate. I think we're in a technical recession. Maybe it's not necessarily a functional one.
What do you think is going to happen to home prices in Jackson Hole across the board this summer and fall?
In general, I think that, in our market should remain somewhat strong. The basis on that is that there is a national housing shortage and they're not building enough to keep up with current demand, let alone demand that's coming. And because there is so much demand, there's just no real room for prices to drop all the way down. I think when rates come down, there's going to be a flood of buyers into the markets, and that's going to push values back up to where they were. We are in a window right now where there's not a ton of buyers out there, buyer competition. Buyers who are on the sidelines right now waiting for either interest rates to come down or for values to bottom out for their window to get in. I just don't think that is, the best place to be. You might as well get in when there's inventory that you like and when you're not competing with other buyers, to get into that property and have sellers that are more accommodating than they have been the last 3 or 4 years.
Absolutely. So one of the things that I really love about Guild Mortgage is all the different options that you offer people. Mm-hmm. And could you just explain why that's different than maybe walking into your traditional bank and talking to the mortgage person there?
Yeah, definitely. And that's one of the amazing things about Guild is we are a huge lender and we have a ton of options, that other people may not have. We are a mortgage bank. We lend our own funds. We underwrite, process, fund everything in-house. So after the loan closes, if you have any issues, you call my office directly and we're able to help you out with that. We also have non-conforming options out there that go outside of the regular box. We can do anything from, bank statement loans if your tax returns don't look great, or we can even do on investment properties, we can do a debt coverage service ratio loan, which means we're not even looking at your income at all. We're just looking at the income from the rental property. And as long as that rental property covers the payment, sufficiently, then we can lend on that property. They just came out with one that doesn't even need a ratio for the income as long as you're at the proper loan to value. So we generally can find, a loan to fit your needs.
Andy, thanks for explaining all of that to us today. And my biggest takeaway is you're the expert on interest rates. Don't listen to the news. Pick up the phone, call your local mortgage lender, talk to them. There's so many options. So thanks for talking to us today, and reach out with any questions.
Definitely. Thank you so much for having me. Yeah, I equate the mortgage process to a foreign language, and if you don't do it every day, there's no reason you should speak it. So yeah, feel free to call me, ask lots of questions. It's better to know the answers and do everything correctly to start than do something that you think is right and, and be completely off.